Currently, we're in 2021 and have witnessed a whole lot of movement in the economy the last few years. Investing has always been something which people used to take part in carefully. But now, more than ever, the landscape is changing. Gone are the days where you can only choose to invest in companies that you know and trust. Now, via social media and other apps, we can see hundreds of people give their own recommendations and share their own experiences. The effect of investing has also witnessed a drastic change from the COVID-19 pandemic, which completely changed the world we thought we knew. The power of conscious consumer spending is going to be needed to be implemented now more than ever, with the economy being very fragile in recent times. But before we can get any further, please make sure to leave a big thumbs up on the video and subscribe to our channel for more content in the world of investing, finance, and cryptocurrencies. Now, here's why the future of investing will never be the same again. Investing in the future. COVID-19 has been a trying yet revealing time for many people around the world. It has shown the fragility of our current system and how we have become comfortable with some not so sustainable consumer practices that have put a heavy strain on small businesses. With this strain has come an awakening of sorts that our global community hasn't seen in over 100 years. This awakening has caused a surge of attention and support for small businesses, with more attention going towards the idea of an impact economy and investing our money where there is the most value, rather than where there is the most convenience and profitability. Environmentally conscious investing, sustainable capital market practices, and impact theory are gaining steam and are slowly becoming the new status quo for customers, corporations, and investors. Cryptocurrencies and unsustainable short-term goals. For example, a huge point of attention when it comes to investing has been surrounding the cryptocurrency space. For all those who are for some reason unfamiliar with the concept, cryptocurrencies are a form of digital currencies which you can purchase online. The first ever cryptocurrency, which is also the most popular crypto in the world, is Bitcoin, which was created by an anonymous person who goes by the name Satoshi Nakamoto, who invented the coin in response to the stock market crash of 2008. Since then, the investing world has erupted into a spending frenzy, spending millions and millions of dollars on various altcoins. Although we have to argue that some coins like Ethereum, Cardano, and XRP have a lot of pros and are likely to be a good investment for the future, a lot of social media has turned crypto into a teen's gambling nightmare, investing savings into coins like Doge, which became popular because of a meme. Although many investors have made millions from short-term gains, Dogecoin itself has been falling rapidly and is currently at 27 cents as we speak, almost 200% less than what it was just months ago. This goes to show the lack of longevity in some of these coins, among others, like Shiba Inu, that are just being invested due to buyers' convenience without having done more proper research. All this development has led us to think, does it truly make sense to dive straight into the world of investing in a particular asset you know nothing about, even less so when you don't know how they are contributing to the dangers of the environment and direct inefficiency? This is also a good time to mention that we are not financial advisors, and what we are stating is not financial advice. We are simply discussing the ongoings of the market and presenting you the facts as laid out. Now, back to the video, where you spend your money. One important thing that needs to be talked about in terms of investing is investing the money in the right area. This is why it actually matters where you spend your money. When you buy groceries, technology, services, or products of any kind, this money should be thought of as an investment to the overall impact of the goods or service. While this may seem a little overboard, it actually goes a long way to determine how sustainable and disaster-proof an economy can be. Some of the most potent examples of these types of business include those who are concerned with sustainable development goals and the real tangible value and impact they will have on their customers as well as the planet. Many of these companies can be found right in your backyard, with these types of goals being very present in many local small businesses. These businesses, dealing on a smaller scale, must put their resources where the intent is in order to maintain the small yet loyal support system they have all worked so tirelessly to create. One such example can be Ripple. Since we were just talking about the crypto market earlier, what better example than a company that is currently doing a lot to actually spread awareness? Ripple is the company that supplies XRP, and as of now, their coin can be bought for 56 cents in the market. The coin has such popularity among big investors due to the sustainable impact that the coin has, given it consumes much less non-renewable sources of energy to make as compared to some big coins like Bitcoin. In fact, due to their fast transaction times and flexible transaction rates, over 200 financial institutions and banks, including Egypt's largest bank, have partnered with the company, seeing a big future for the crypto coin. Smaller businesses and trusting innovation. Smaller businesses have had to dial services back and ensure safety and value over cost effectiveness in many cases. This complete shift has cost many businesses their livelihood and forced innovation. Consumers have begun noticing this though, and the new trends are showing that support for businesses who have survived this shift is increasing. These businesses are providing valuable services in a safe and sustainable manner, even if it costs them more in the long run. This has shown consumers that extra effort towards sustainability and value does not come easy and merits reward and support. COVID has created an urgency in local communities that hinges on a give-and-take support system that thrives on trust and transparency. Even larger larger companies such as Amazon are showing their support for this initiative by demonstrating to the world that they have these unguided steps in mind in a way that they operate, as well as how they provide their services to the world. Desperate times have shown us that creating a better, safer world can go a long way in determining value. Conscious consumer spending. Since the COVID crisis has taught the world how much power they have with where they spend their money, there has been a renewed focus on supporting small businesses and considering the mission and impact of companies where consumers regularly spend and invest their money. According to the Harvard Business Journal, the trends are showing us that people are much more concerned about the impact of companies on society over the immediate convenience many big corporations are striving to provide. The cracks in the armor stem from the fact that many big corporations are not putting their resources where their intent is. This trend is fading away, and COVID-19 has caused consumers to proclaim that they are no longer swayed by low prices and convenience anymore. Consumers are realizing the power in their hard-earned money and that they can show their support for a wide array of companies. Investors and consumers alike are participating in this trend, with ESG, environmental, social, and governance practices becoming the new status quo. To build an impact economy, we need to ensure that everyone understands that every action has consequences and produces impact, good or bad. The decision is up to us. In the absence of impact theory, we are creating the illusion that most commercial activities might have no impact, and that impact is irrelevant when it comes to an individual's choice of where to work, what to consume, and how to invest. COVID-19 has taught us that every dollar counts, and that during hard and uncertain times, it won't be corporations there to bail you out, it will be your fellow citizens. Transparency is a must for the future. With this increased demand for companies to disclose their mission and overall impact on society, there will need to be trusted sources of information that justify investments and consumer spending on new products entering the market. This shows high potential for blockchain technology to help provide protected proofs of a company's information, as well as a trusted source of information that investors should have access to. This leaves us to think, are sustainable companies now the future for our economy? The only way we'll know for sure is if we loosen the grip that only a handful of major companies have on the world and narrow the wealth gap they have created. With this, we have reached the end of our video. Let us know your thoughts in the comments section. What are your thoughts on the future of investing and how it will look decades from now? As always, please make sure to leave a like on the video and subscribe to our channel for more content on investing and cryptocurrencies. We'll catch you on the next one.